Hi everybody and welcome to another marijuana market update. I am Matt Badiali. I hope you guys are having a great week. I have really good news for those of you who are looking to pull the trigger on investing in the cannabis sector. The market is open. It is game on. I'm going to throw up a quick chart of the Horizons Marijuana ETF HMMJ. And as you can see, this has bottomed here in the middle of March. And since then, it's come up, bottomed around $4.81. It's come up to about $6.67. So I'm going to go ahead and declare the market open, and it's time to buy again. So for those of you who are looking for an entry point, I would start now. Actually, the reason is a lot more than just the wiggles on this chart. Looking at Aphria, their quarterly numbers came out middle of this month. And they had the best quarter that they've ever had. Going year over year, revenue doubled, and its gross profit went from $13 million a year ago to $45 million this last quarter. So excellent results, and I'm not really surprised. I mean, we're at a time when you're going through self-isolation. The cannabis products really help you with sleep. They really help you with depression, and so there will be an increased demand. In addition, the retail rollout continues. So we're seeing them continue to build out. I know that there are some places where the retail was closed, but for the most part, we're seeing a steady growth. It's not as fast as everyone wanted it to be, but that's okay. I kind of expected it to go slower than what the market anticipated. When you see these tiny little companies with barely double-digit million-dollar revenues and they're trading for hundreds of millions of dollars in market value, it got way out ahead of itself. This recent crash really helped reset things for the cannabis space. And so right now, I think you can jump into one of the ETFs, jump into one of the big companies. I'm thinking Aphria, I'm thinking Cannabis. Those are going to be the big, steady, kind of the Exxon Mobil companies of the cannabis space. And we have a lot of room for this to continue to climb. I like to see companies that show steady revenue growth. And I like to see companies that show me that they're using their money to good advantage. Some of these companies are just out there spending willy-nilly. You want to really be careful. We want them to answer questions. So what are you doing with the money that you're spending each quarter? And how does that increase the value of our shares? So for these retail companies, we want to see them add retail square footage. We want to see them increase revenue. So selling more product through marketing, selling new product through additional retail outlets, building new deals to get their product out to new markets. That is where the money should be going. When you see expenses in general and administrative costs going up, when you see salaries for executives going up, that's not a good use of this cash. And it's very common to see this. There's when these companies have all this money coming in, waste just happens. So as an investor in these early stage companies, it's really up to you to be digging through their financials and understanding where the money's being spent and how it's going to increase your share price. If they're doing it the right way, these stocks are going to make us a lot of money. If they're doing it the wrong way, they're going to end up being delisted. We just saw HMMJ dumped several companies, some that sounded pretty promising early on, like Agriflora, gone. So we want to buy the companies that are growing, and we don't want to buy the companies that are going to be the poster children for waste, excess, and poor use of capital. And with that, I'm going to wrap things up. Thanks very much for watching. Don't forget to like and subscribe below. This was your marijuana market update. And again, I'm Matt Badiali. Have a great week, you guys. I'll see you next week. Bye-bye.